Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for March 26th, 2019. And we're talking restaurant stocks. Might not be something we think of every day, or at least trading every day, but maybe we eat at them, or maybe we're interested in what their stock performance is doing. So we'll take a look at that in tonight's video. But always we'll start with the S&P futures just to look at where the market is, what the expectations are, and any update for key levels as we do intraday, or in tonight's video, set up swing trades. We're still into this 2800 level, and that's roughly the 2811 gravity spot, which has been resistance and now potential support. We're also up against that 20-day exponential moving average, which again serves as a pivot point. Pivot points are nice for us as traders because they give us a spot to put on positions on a departure up away from it. And if that's wrong, if the market goes up a little bit and then goes the other way, that's going to give us a relatively tight stop loss. We're essentially executing trades or putting on positions as close as possible to retracement or reversal points, short term, of course. So if the market does continue higher, 2850, and then we have to go to a higher frame, including 2900 and above, are bullish continuation targets. Otherwise, any movement under 2800 that sustains and goes could push the market lower toward 2750 or lower than that. As we keep that in mind, we'll take a look at where the retail stocks are, specifically restaurant stocks. Starting with a good Dow component, S&P 500 component, McDonald's. Now, this stock is quite high in terms of price value, in terms of a restaurant stock, but it is $190 per share, and it's forming a triangle. So we have this pivot spot, and that again is 190, and we can see how McDonald's responded in the past. We can update our prior trend lines. Just taking a look at this chart for the moment, and we'll talk about volatility shortly. But as we speak, McDonald's is into resistance at its prior high. So it will be the pivot point if you wish to put on a short sell or fade position. With volatility as low as it is, that probably will tilt toward a put purchase strategy in out spreads or other vertical plays. Any type of stop loss or exit or roll criterion should be above 190, 192, maybe even 190, 150. That's roughly the prior high on the chart from last 2018. Wendys is another hamburger place, and it's just a retail restaurant name that we've probably heard of. We have a large scale rectangle with shares, and that's not what's happening in McDonald's. So if you do like what we like to call fade or bounce or range style tactics, and we call that low to high or high to low, putting on positions at resistance points, playing toward at least half the positions or half the contracts toward the midpoint of the range, maybe even playing for the full target being the low of the trading range or the rectangle, and then playing up away from it toward the prior high, and then away from the prior high toward the prior low. We're seeing a bounce play in Wendys shares right now off of the 16 and 25 cent level. The midpoint is roughly $17.25, and the upper pivot resistance $18.25. This is probably not a stock for long-term trading, or probably not a stock for rapid capital appreciation, given that this range is roughly $2. So I might want to pass on this, but I did want to make a comparison to McDonald's and why that's probably a better opportunity for swing and especially intraday trading. The other would be Yum Brands, which might not be a name you've heard of, but you've certainly seen these stocks, or at least the companies what the stock represents or owns. That includes KFC, or Kentucky Fried Chicken, Pizza Hut, and Taco Bell, just to name a few. So this is an uptrending stock. Unlike McDonald's, it is broken to new 52-week highs. It's having a little bit of trouble at the 100 per share round number. We are getting volume and momentum confirming, so we do have a potential support bounce play, or we like to call them pivot plays, roughly into this 98 per share spot. Retracement trade would be a bullish departure up away from here, but just like the market, if this level fails and sellers take us beneath our price and 20-day moving average spot, well, that'll open up a sell swing pathway toward at least 96 per share. That's going to overlap these price levels and the 50-day moving average. Volume is strong, relatively speaking, and so is momentum. So this should see continuity higher, provided that the market doesn't take a tumble shortly and Yum Brands does not fall deeply beneath 98 per share. We mentioned Taco Bell. There's a competitor to Taco Bell, and it's Chipotle Mexican Grill. Chipotle is one of these, wow, how can this stock be this high? Examples, but it is. And Chipotle, the share price at least, is pushing toward this 700 per share level. Insane. Yes, absolutely. Probably best trading options on this name as opposed to individual shares, given how high priced or high valued these shares are. So of course, any type of in-out spread, selling premium down here, but we're getting ready for one thing that's unique about Chipotle shares, for an earnings announcement coming up on the 24th of April. So that's a month away. If you are putting on option positions, just know that the implied volatility will probably, all things being equal, continue to creep a little bit higher as we push toward that earnings announcement, really a month away. Nevertheless, this is a strong stock getting stronger, and in our stocks at new 52-week highs or high ADX scan, these are components that we want to look for and trade. We want to trade in the direction of the trend, and that is on pullbacks or retracements to the rising 20-day exponential average. Clearly, we're above that right now. So if you can't help fighting a trend or can't help fading price, this might be the spot for you. And that's up into $700 per share in Chipotle. And on this weekly perspective, we can quickly see how it has transpired or pushed all the way back from 300 all the way to 700. If you remember or traded alongside this period, well, that was that E. coli scare or those supply scares or the other little negative headline news that dropped the share price from about 750 really to end itself at about the 300 level. And we've had persistent uptrend, higher highs, higher lows, rising averages, strong volume, strong momentum, all the way from there. So clearly 700 is a pivot. If Chipotle shares can get above that spot, you'll probably see it eventually to 750 per share. I'll finish up with one more, not exactly a retail restaurant name, but we'll take a look at a popular place, Starbucks, just for comparison's sake. This one continues to make higher highs, higher lows, and is, or just did really, make a new 52-week high today. And that is the purpose of our scans for strong stocks getting stronger. We expect that which is uptrending to continue uptrending, and we do want to put on positions or put on risk or take profits on pullbacks. We want to trade in the direction of this trend. So Starbucks continues to extend. Is there a trade right now? Probably not. The Starbucks price train has left the station, at least in terms of short-term trades. This may be a fade candidate or a stand-aside candidate, and let this pull back for the next buy opportunity. Nevertheless, we'll go back to the S&P as we look at these retail names, and of course there's plenty others, but you want to focus on high volume stocks, stocks that are making new highs or stocks that are trending in one direction, or if you are a range or fade style trader, you want to play bounces or low to high targets, low to high pivots, or short selling, high to low. Nevertheless, keep these stocks on your watch list or at least broaden your perspective to take a look at these and maybe some other candidates that may cross your watch list or capture your attention. But as always, be safe, be careful. This is Corey Rosenblum with our Theo Nightly video for March 26th, 2019.